Hi, Ellie Yung with Ellie Yung Real Estate, and today we'll be discussing 1031 exchanges. What exactly is a 1031 exchange? A 1031 exchange is an IRS investment tool that allows you to buy and sell investment properties while deferring the tax gains. Remember, a 1031 exchange can only be used for investment properties and not for primary residences. Unlike a primary residence, you cannot claim capital gains exemption on an investment property. So how exactly does a 1031 exchange work? First, you'll want to identify the investment property that you're going to sell. Then focus on finding a replacement property to purchase. Okay, so there are three primary rules to follow when searching for a replacement property to exchange. Number one, the replacement property should be of equal or greater value to the one being sold. Number two, you have 45 days from when your first property closes to identify 3 new potential replacement properties. And number three, you must close on one of those identified properties within 6 months. Because the timelines can be very stressful, you'll want to plan ahead when doing a 1031 exchange. It's also important to note, when you sell an investment property, you cannot touch or receive any of the proceeds from the sale of the property. The proceeds will need to go to a 1031 exchange accommodator who will handle the funds. If you decide to keep some of the proceeds from your sale, that is called a boot, and you will be taxed on that portion. So now, why would someone want to do a 1031 exchange? Let me give an example. I had bought an investment property a few years ago, and that home was built in 1975. Because it was an older home, there was increased maintenance, and I decided to sell that property and exchange it for a much newer property. I didn't have to pay taxes when I sold the first investment property and was able to defer the taxes and reinvest my money. Another example, I had an investor who owned 2 smaller homes, and rather than manage 2 single-family homes, he decided to consolidate his real estate portfolio by buying a multifamily. Many investors will take advantage of the 1031 exchange tool to grow their portfolio and continue to reinvest in more profitable properties. However, in order for you to take advantage of the 1031 exchange tool, you must first own an investment property. The key to investing is having your money work for you, leveraging your cash to maximize the returns. I'm very passionate about my investment strategy and helping others achieve their dreams to becoming work optional. If you'd like to hear more or are thinking about buying, selling, or investing, please contact me. Also, check out my website at ellieyoung.com to learn more about investment strategies. Anyone can sell you a home. How many can create a wealth strategy for you?